So I want you guys to remember, we have our 2-on-1 special going on where you buy one membership, whether it's the US30 or the Nasdaq Snipers, you get the other one totally for free. It's going on for the first 25 students only. Get connected. So last week we had a 2-day, all-day training event for our US30 Assassins Club students, okay? And on yesterday, I took a huge chunk of our time and I focused on nothing but defensive trading, all right? Now, it's very important that when you're trading on the market, you don't get caught up in just focusing on how to enter, how to make money, but also what to do in the event that you get into a bad situation, you get into a jam. Now, it was during this training session that I focused on defensive trade. You're talking about before you get into the market, not just having an idea on which way the market is going, but also knowing what to do in the event the market chooses to double back on you, okay? And a couple of the things that I pointed out to my students is we have to know where base is. And whether or not you guys know, base is basically support and resistance, okay? Now, I teach my students to enter from support and resistance. If the market is at support, you ride the market up to resistance. If the market is at resistance, you're riding it down to support. That's the baseline, okay? So if the market is at a support and resistance level, and let's assume that the market gave you a reason to get in, you need to know how far is the market from base or from support or resistance, so that if the market was to pull back, you guys know the market likes to pull back and retest levels. So if the market pulls back and retests the level and you're already in the trade, are you going to just jump out because your trade is in a negative? You don't have to jump out because it's in a negative. You have to know, okay, before I get into this market, I see it set up nicely. I got my close confirmation candle, whatever it may be. I'm entering the market right now. Boom. You need to know how far am I away from base. If you're too far from base where it's going to put your account into the red, you don't want to be out of the money. You don't want to risk, let's say, at 50, 60 points. That's not your trade to take, okay? But if you get into the habit of measuring back to see how far you are from base, support and resistance, it's going to give you an idea. Okay, if the market pulls back, don't panic. Don't panic. Okay, if you're into the market and it starts to pull back on you, you know that you can survive the market going back to base. So you now have a place in mind, as well as on the chart, where if it pulls back to this place right here, I'm good. As long as it don't go any further, then I'm good to go. So you don't have to panic. So what does this do for you? Mentally, you're secure. All right, emotionally, you're secure. But what happens, a lot of traders, they get into the market, they're expecting the market to just go right into the money, like right away. But the market wants to pull back and wants to do the little song and dance. And unfortunately, you don't even know how far you can survive the market going back to base. So if you know this beforehand, you can survive the trade, okay? Because the market is not going to always go right into the direction that you're expecting it to move in, okay? Now, this would definitely help you out. This is just one of the tips that I gave my students, one of the things that I pointed out to them that would help them realize how to get through these tough times. Now, another thing that's very important is you have to know what is your play should the market go against you. Are you one of those who are going to shut down the trade? If so, at what dollar amount are you willing to shut down that trade? At what amount are you willing to say, you know what? At $50, I'm done. I'm not going to let the market go any further than 50. At $50, I'm shutting the trade down. I'm only going to risk $50. Okay? You have to know that beforehand, or know the price point before you get into the market. Now, for me, I like to use the always win strategy. All right? I like to lock up my trades. Just like I have a video on YouTube, the always win strategy. Basically, I'm using a broker where I can hedge my trade. So if I'm inside the market and the market goes against me and I'm uncomfortable with it, I'm gonna lock up that trade. If I'm running $1 up, I'm gonna run $1 down, and I'm gonna lock up that trade. That way, whatever the difference is between the two trades, whatever the negative is, $25, $50, that's all I can lose, whether the market goes all the way up or all the way down. So now I'm focused on, okay, where's the next best setups? That way I can trade and I can get back that negative equity between the first 2 trades, okay? Now that's another option that you have, but you have to have this in place. You have to know what option you're gonna take before you enter any trade. Because the worst thing to do is to enter the trade and wind up blowing your account because you didn't have a defensive play. So listen, just to tell you guys all the time, have nothing short of a fantastic day. Remember, stay healthy, stay safe. And as always, remember to remain and stay creative in the times we live in. I'll see you guys in the next video. All right? Peace and blessings, everyone.